Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra, and the top stories at 1:30 p.m. this Friday are: the mid-caps underperform large pairs even as the Nifty tops 17,550. Stocks build on a rally led by Adani and financials. Healthcare, consumer discretionary are the weak links.
A strong third quarter business update gives Angel One a fillip. The broking firm records good growth in clients with market share gains in almost all the segments. This is for the month of February.
Kiri Industries springs up after a Singapore court confirms the value of its stake in Dystar Global. The managing director tells CNBC-TV18 the enforcement of this order will take a few months, adds that exports continue to be weak even as the company expects recovery in the domestic business.
PSU banks power up on the back of relief rally as Adani Group stocks gain. SBI has the highest exposure by size to the Adani Group, while PNB and Bank of Baroda are also key lenders. All right, those are the top headlines. As far as the market are concerned, it's the Friday cheer on the Lal Street today. We have Nifty sitting with gains of 260 points, has been able to sustain those higher levels and is at the day's high 1.5% higher on the Nifty as we speak. And it is led by some of these banking names. So PSU banks are firing away on all cylinders. So we have Bank Nifty, which is up 2.2%, and PSU Banking Index, the last time I checked, that was up around 5.2%. So that's the kind of rally that we are seeing. Of course, some sentimental relief because of that big fund infusion that we have seen in Adani Group stocks as well. Advance decline ratio absolutely in favor of advances. Reema, the global market suggested that as well. I think the sweetener was what came through in terms of fundraising last evening.
Absolutely, right? It's the Adani Group, the fact that you've got a very marquee investor, quality investor who's pumped in a big amount, the commitment itself, right, of 15,500 crores. So it's a combination of a quality investor committing a very large amount. So if there were any fears in the market of a potential default, perhaps by the Adani Group, or just things going downhill from here on, that has completely been abated now. And the kind of confidence that it's infused, the endorsement has fueled a big rally in the Adani Group stocks and the banking stocks. So that's clearly the big headline for the day, and the markets are up and away. Hemain Kapadi of KR Choksi Securities now joins in for a technical check on the market. Hemain, afternoon. We had a gap up opening. We built on it, but in the last 30 minutes, the markets have paused at these levels of 17,580 thereabout. It's not managed to conquer, climb up in the last 30 minutes. Your thoughts on the day so far? Do you think the best of the gains are now for the day are in already?
A very good afternoon to you, Reema. Thank you for having me on the show. Well, coming back to your question, yes and no. Best of the gains are already in. The level to watch out, okay, 17,430 was one level, Reema. The next level is 17,613. We have the VIX at 12.17. Metals are oversold. I think they are bouncing back. You have n number of stocks, and the entire Adani Group is bouncing back, and more importantly, I believe the architect of this move is Reliance Industries. If you would have noticed, Reema, last week, a couple of weeks back, we saw the Nifty move from 17,400 to 18,100. Even that time, the architect of the move was Reliance. I mean, it's not a stock, it's an industry in itself. So Reliance has finally woken up, is bouncing back, and I believe there is more headroom. So frankly speaking, yes, for the time being, like you're saying, for today, might have just sort of, run its course. But Reliance still looks solid, and if Reliance is going to go up further, which I think it will, we'll take out 17,613 and head towards 17,792. Oversold, a lot of things happening. Many stocks were down and out. So frankly, I think the market needed a excuse to move up. Reliance and Adani have done that.
Oh, yes, that's right, Hemain. So we are seeing good gains across the board today. Thank you so much for joining us today, and have a great weekend ahead. It was a pleasure speaking with you today. With that, we'll slip into a short break now. Up next, we'll be joined by Gagan Banga, who's the VC and MD at India Bulls Housing Finance, to discuss their business outlook. Stay tuned. Welcome back. You're still tuned into Midcap Radar on CNBC-TV18, and let's focus on the first corporate on our radar now. India Bulls Housing Finance saw a subdued Q3 with assets under management at a 28-quarter low, and there was a dip in the asset quality performance as well. Interest margin, though, saw an uptick. Gagan Banga, the Vice Chairman and Managing Director at the company, is joining us now to discuss the business outlook and trends as well. Gagan, good afternoon. Thank you so much for joining us. I wanted to understand in Q3, why did the book decline so much? Till last quarter, you were confident of growth as well. What dented it this time? Even your securitized book saw a decline this time. So this is despite the great partnership that you've been seeing. Tell us what happened in Q3 and what are the demand trends or the trends looking like in Q4?
Yeah, so what we've been trying to achieve over the last 3 to 4 years is a complete transformation in our business model. Historically, a large part of our profitability was derived out of the wholesale book, and the retail book created our retail footprint and our franchise, which was catered to by thousands of employees and branches. Today, as we look to scale down the wholesale book, which has been a continuous process over the last 3 years, we are clearly benefiting from the robust residential real estate cycle and the reduction in the book, despite us putting in reasonably large sums of money to complete the various projects which are under construction, which are mortgaged to us, continues to see a decline. So what we've been talking about for the last 3 quarters, given the underlying strong sentiment in the residential real estate market, is that versus the earlier guided fiscal 26 target for completely unwinding the wholesale book, we believe that we should be able to do it over the next 18 to 24 months itself, so about 1 year ahead of schedule. But that would imply that the wholesale reduction would happen at a faster pace, which is why 3 quarters ago we said that the various stakeholders should evaluate our spaces, how we are growing on our retail disbursements. And the retail disbursements year on year are up over 300%. And I expect that over the course of the next 12 months, they would further double from here. So as far as retail disbursements are concerned and our market share on a flow basis is concerned, we are firmly back in the saddle as the 3rd largest. And we continue to add a gap between us and the 4th largest mortgage finance company. So that would continue to be the focus. So I would request you guys as well as the other stakeholders to just look at our retail book separately to our wholesale book and our retail disbursements separately to our wholesale book runoff.
Okay.
The other important point is that we have to calibrate the entire unwinding. As you rightly mentioned, the net interest margin has moved up. We are sensitive to how our return on asset plays out here. And given all of that, we can grow the retail book in a calibrated manner. It can't be that we suddenly start doing 2,000 crores of disbursements, because retail clearly is a lower spread, but at the same point in time, a lower risk business. And the transformation which India Bulls Housing is trying to do is one where we are moving away from being a capital intensive business, which is what the wholesale business required, to being an asset light business, which is the strategy around our retail business. And the capital requirement reduces from a requirement of long-term capital to just short-term working capital. So it becomes more like a FMCG company or a completely fee-based business as against a heavy capital requiring business, which it has been for the last 10 to 12 years.
Okay. So Gagan, by FY25 end or the beginning of FY26, there will be no wholesale loans in your book, right? You would have completely unwound it.
Yeah, that is the longest that one can visualize. I hope that
it happens.
We're already bringing the target forward by 1 year. I hope we can bring it forward. If the robustness in the market continues, we should hopefully be able to bring it forward by further 6 months.
Okay. So H2 FY24 or end of H1 FY24, Sorry, FY25 or FY25?
Somewhere in FY25, we will surely be done.
Okay. What's the size of the wholesale book right now? And by the end of FY25, when we're sure that the book would have completely run down, what would be the strength of your retail book?
So we are adding retail assets today at a rate of about 3,000 crores a quarter. We hope that we should be able to double that by same time next year. So October to December quarter for calendar 23 should be 6,000 crores and double that again to 12,000 crores, which will bring us by end of calendar 24. We will be back to the levels that we used to be in calendar 18. So it's a range that we've already seen in the past, capacitized for in terms of physical network. We keep adding people and technology, and we get there.
Okay.
As far as the wholesale book is concerned, it is under $2 billion right now, winding down at a rate of about $400 to $500 million a quarter. So at that trajectory, it should take us about 6 quarters or so to completely wind it down.
Okay. Mr. Banga, I just quickly wanted to ask you about your fundraising plans, if any, going ahead, and the declassification of Samir Gehlot as the promoter. What does it mean for the company?
See, so there have been 3 tracks in which the company has been working. And the most important track from a longer term perspective, given the fact that we were coming off, so in fiscal 19, when we when the IL&FS crisis came and all of that, we had completed 10 successful years or 42 quarters actually of having done a CAGR of 20%. And we were a large balance sheet by any standards with a balance sheet size of about 1.35 lakh crores. And we started the transformation of the business, given the fact that the bond markets for non-conglomerate, non-government type of NBFCs had shut down, and we were a very, very meaningful player in the bond markets. We had as much as 75,000 crores of bonds outstanding at that point in time in fiscal 19. If we look at the transformation of other large balance sheets, for example, maybe in the banking space, if you take the case of ICICI Bank or Axis Bank, etc., when they've transformed, they've had to transform both at the business level as well as at the governance level, and which is starting from the board to the shareholding to the underlying business. And large balance sheets take at least 4 to 5 years to completely transform themselves.
Okay, Mr. Banga, thank you so much.
Process.
Yes. We are very short in time, but thank you so much for joining us today and giving us all those details. It was a pleasure speaking with you. That's the word coming in from India Bulls Housing Finance. The stock is higher in trade today, but Q3 did see some weakness. The split has been explained in terms of the wholesale book and retail business by the management right now. We'll slip into a short break, and up next, we'll be joined by Ganesh Natarajan, the chairman at Honeywell Automation India, to discuss their business outlook. Stay tuned.
Welcome back. Powerful rally. It's 17,600 on the Nifty. We're at the day's high, and the last 10 minutes has seen buying in the auto names. Pull up the Nifty Auto Index, and individual constituents like Tata Motors, Bajaj Auto, Maruti. That's where the last leg of buying has come through. But we've got another important corporate conversation waiting to showcase to you on the sidelines of the NASSCOM Technology and Leadership Forum 2023. I got up with Ganesh Natarajan, the chairman of Honeywell Automation India, discuss the key trends and the business outlook. Listen in.
If you look at the demand for Honeywell, this is one company, a $35 billion corporation globally, which is hugely focused on ESG, sustainability, etc. So if you look at what we do in India, which is both through Honeywell India as well as Honeywell Automation, I mean, we're focused on process solutions, building solutions, IoT, and global manufacturing and software. And all of this is in the key, I would say, the sweet spot of the world. Everybody's talking about sustainability. India has a target of being net zero by 2070. So I think everything we do in terms of automation and technology will be focused about the new world we want to build. So I'm very excited about the future of Honeywell Corporation, and as a corollary, Honeywell Automation, which I chair.
Okay. But what explains the subdued revenues over the last couple of quarters?
See, I think we're all coming out of COVID. As we all know that, we did a lot of work with smart cities, and there is a microprocessor shortage. So the supply chain continues to plague us. And I'm really hopeful that thanks to the PLIs, etc., that the government has announced, we will resolve that problem. But I think it's in the medium term. So in the short term, the problem is not demand. So demand is not an issue at all. But how do you deliver when a lot of our business is automation and technology? So I think that's one thing that's always going to come in the way of electronics manufacturing till we resolve it. And I think resolution is pretty much close at this point of time.
Okay, that's Honeywell Automation for you. The last couple of quarters have been subdued. Their exports have been hit, but the company is quite confident about the long-term demand and the supply side situations which plagued the company are now slowly getting resolved. As I said, it's all about the autos now in the last 10 minutes. The Nifty Auto Index, let's once again pull that up. Remember, the Auto Index has been a rank underperformer for the last 5 years. Over the last 5 years, the Nifty Auto Index has given a CAGR return of only 3%, which compares with a 10% return on the Nifty. So autos have gone through a long 5-year patch of underperformance, and now, according to Motilal Oswal, it's taking a U-turn. So they're very bullish on the auto sector. They believe the worst of the auto down cycle is behind them, and valuations too are reasonable. That's the auto index for you and the up move that we're seeing today. But let's get to our Midcap Spotlight segment. Surbhi is talking about Angel One for us. Surbhi.
Angel One is surging in trade today, and that is because of a strong monthly business update. Now, the Feb numbers were quite decent given the volatility in the market. The gross client acquisition saw a growth of 15% on a month-on-month basis, and their overall client base saw a growth of 3.4%. They recorded lower number of orders this month, but that is because of one less trading day in the month of Feb. Their margin funding book declined by 7% and is at 1,300 crores versus 1,400 crores in the last month. Their average daily turnover, that was up 3%, and they gained market share in all segments except for the cash segment. Their F&O market share was up 70 basis points, and most of their daily turnover growth has come from the commodity segment. In that segment, they have seen a market share expansion of close to 600 basis points, and the market share now stands at 57%, which is the highest in the last 18 quarters. So this is what the street is really liking.
Surbhi, thank you very much for that. That was our Midcap Spotlight stock of the day. With that, we're out of time on Midcap Radar. Thank you for watching.